Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. The growth of artificial intelligence, or AI for short, will fuel an explosive demand for secure data centers. And that's where today's income pick comes in. Digital Realty Trust, traded on New York Stock Exchange under symbol DLR. John?
Yeah, thanks, Mo. Digital Realty operates as a real estate investment trust, or REIT for short, and it has more than 300 data centers in North and South America, Europe, Africa, and Asia Pacific. Its customer base is comprised of many top-tier companies, including more than 250 Fortune 500 companies. The bullish tailwinds for the AI sector are obvious as many companies move towards using AI to generate critical insights. More importantly, the data related to AI has to be stored somewhere, and especially somewhere that's secure. Many companies currently operate a hybrid model in which their critical data is stored both in-house and at third-party locations, like those offered by Digital Realty. Now, Digital Realty stock has easily outperformed the S&P 500 and NASDAQ with a year-to-date return of around 30%. It also has excellent long-term share price potential.
John, how is this company doing on financial front?
Digital Realty has grown its revenues in the last 4 consecutive years from $3.1 billion in 2018 to a record high $4.7 billion in 2022. This represents compound annual growth rate of 11%, and the company's revenue outlook remains positive. Analysts estimate that Digital Realty Trust will re-energize its revenue growth to the tune of 17.7% to $5.5 billion this year, 2023, followed by 5.9% growth to $5.9 billion in 2024. Now, on the bottom line, Digital Realty has earnings per share profits in the last 5 straight years. The company's 5-year best diluted EPS was $5.94 per share in 2021. Now, analysts expect Digital Realty Trust to report a slight increase in adjusted earnings to $1.03 per diluted share in 2023 and $1.29 per diluted share in 2024. Now, on its balance sheet, Digital Realty Trust is saddled with debt of $18.3 billion, but this is partially offset by $1.1 billion in cash. A risk is that the current high interest rate environment will have a negative impact on the company's margins and expenses, but that's not a major concern at this point. Now, Digital Realty Trust's Petrosky score, which is an indicator of a company's balance sheet, profitability, and operational efficiency, is a relatively strong reading of 6. That's well above the midpoint of the Petrosky score's range of 1 to 9.0.
And how is this all affecting its dividend?
Well, Digital Realty's reliable earnings growth is helping support its high-yield dividend. In fact, DLR dividend has increased for 19 consecutive years. Digital Realty Trust's current dividend is $1.22 per share, and that represents a yield of 3.86, at least at this recording. That's pretty consistent with its long-term 5-year average dividend yield of 3.54%. And given the company's higher expected earnings over the next 2 years, DLR stock's dividends should continue to rise.
John, thank you so much for your insight. The growth of AI industry should drive a revolution in demand for data centers. In our view, Digital Realty Trust is well positioned to benefit from that growth. Digital Realty Trust stock provides capital appreciation potential and steady dividends to income investors. Meanwhile, DLR stock has extremely high and broad institutional ownership, with 1,317 institutions holding the majority of the outstanding shares. That is a good sign. That's it for today. Make sure to go to incomeinvestors.com now to get our free special reports on our top 3 income picks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.